This is our Forex blog for September 22nd, 2011. And unfortunately, I came into work and eSignal had, for some reason or another, logged me off. Sometimes my partner takes my login and that kicks me off. That's possible. But nonetheless, that's why the real-time updating of the intermediate time frame trend, daily, weekly, monthly, was not done today. I would like to start today's blog post by introducing a new feature that we're rolling out today. One of the keys to trading is small losses, big wins, and I think this is one of the number one mistakes that new traders make. They'll take a trade, they'll buy it right in front of a major resistance area. A resistance area, for those who don't know, is an area where there's likely to be some selling. A support area is where there's likely to be buying, and usually big buyers. And so let's say you have a few currencies up: pound dollar, euro, euro dollar, euro yen, and pound yen. This new feature, you right click, add columns, resistance areas showing up right into your hot list and the number of pips they are away. If you want to see 3 of them, I have this option. If you only want to see the next 2 resistance areas higher, you see that. If you only want to see the next one, you do that. The only reason for the 3 options is in the hot list in the quote sheet, scripts don't have the ability to have options. So this one shows 3. This is what most people will use. The only reason to use 2 or 1 is if you just don't have enough space. And this is going to go download a lot of data, come up with the variables here, and you can also sort this. And so the currency that has the next resistance area the farthest away is the euro dollar. It's 18 pips away. It's a daily midpoint. 52 pips away from the current price is one of the Fibonacci areas, and 61 pips away is the daily S1. So, you know, if you're looking to buy a currency, you want the resistance to be the farthest away. If you were looking to sell a currency, you would want the support to be far away, and you'd want to see a lot of resistance right above you so you could have a logical profit target. Some cases, the 3, you know, when you're trading and you look at this, you may find an instance where there's 3 resistance areas 10 pips up. And so the market's not likely to go through there, and therefore this is very, you have very strong resistance above you, so you can more safely sell. If it does bust through that level, you know, you're going to have a loss, but it's going to dramatically increase your odds of a trade. So this is a new feature I'm just unveiling it here in the blog, and now we'll do our regular blog post. And there will be another one when the official one's released that shows you the support and the resistance. Again, you can show one level in here, which will just show these right here. This one is the one that shows 3, so you can see the resistance area above that is 44 pips away, and another, you know, 20 something or less than 20 is the daily S1. So not only do you know how many pips away they are, you can sort by this to see farthest away first, closest, and it also shows you the other ones. I may in the future put in coloring that anything that's over, let's say 20 pips away is colored, you know, like a slight dark, or, you know, a light gray or something, so it stands out more. All right, in doing today's class, like most days, also for those who hear this, I have a stand-up treadmill desk, and you know, that's what the noise is in the background. I'm always trying to make it harder on myself, so I'm walking at like a 4-degree upslope. So normally most days I'm not out of breath, but I just increase the elevation of my that I'm walking on, so that's why I may be a little huffy puffy. Anyway, we want to buy the strongest ones versus the weakest, and the top histogram shows you the real-time bar-by-bar analysis. Underneath that we have the intermediate time frame trend, which only runs live. When I came into the office at 11, I started it running. That's why you can see it started there. Daily, weekly, monthly are underneath there. You know, the easiest trades are when all 4 of them line up. Real-time strength, intermediate, daily, weekly, monthly. You can see the yen was very strong today, and for the most part the dollar was. The dollar had more peaks of red than the yen, and so therefore if you're going to trade, you know, let's say later in the day, 5, 6, even 8, you might choose the yen over the dollar just because the yen did not have weakness before. It had more strength and less weakness, and the daily, weekly, monthly trend is also stronger. One of the weakest ones across the board was the Australian, the New Zealand. The CAD was weak today. However, the monthly trend of the CAD is up. I pretty much, for the longer term trends, care more about the weekly than the monthly. The monthly is on the bottom, the weekly is above that, the daily is above that. The Swiss, also very weak weekly and monthly trend, and it was pretty much weak all day until about 7. So, the Australian yen sell, New Zealand yen sell, CAD yen sell, and Swiss yen sell up until about maybe 7 here. You know, once you get an hour of strength, you would expect weakness to come back, but it doesn't. So, you know, typically that strength will come back, which it did. Let's look at the Australian yen sell. Obviously, this is pretty much a no-brainer. It's underneath the hourly. It's one of the weakest ones, and you can see it fell and fell and fell and fell and fell, way beyond all my Fibonacci estimations of, you know, where the market's going to find support. Extreme, extreme weakness. New Zealand yen, same thing, down, down, down. You know, if you want to make it easier on yourself, if you, you know, I like a lot of times make things hard on myself. As you can see, I'm walking a mile and a half up a 4-degree slope. It's harder than what I've been normally doing, a mile with flat surface. So you always got to push yourself harder. But in trading, why go through that? You know, pick the low-lying fruit. And when the currency meter shows you that Australian and New Zealand are weak on all time frames and the yen's strong, you know, you're going to have days like you see in other blog posts where the market's very choppy. You have some strength 1 hour, weakness the next, strength comes back. Why not on days like this, you know, make enough to live on for a whole month? You know, because that's the easy possibility on days like this. You know, days like this can get rid of 2 weeks worth of continuous losses when you have trends that just go, go, go. Anything, remember, these tools are made of 5 different statistical trend tools that compare all the tools or all the currencies on different time frames. 3 of them measure direction and 2 of them measure intensity. So the only time you'll have a plus 80 or minus 80 reading is when the vast majority of the directional tools are saying, for example, the yen is going up, and only when the intensity is also extremely strong compared over the last 20 days, you're going to have plus 80 levels. And the only time you have plus 100 levels is when, you know, this might be the strongest move up in the last 2 weeks. You rarely are going to see a plus 100 bar, and very rarely 2 within the same hour. This is one unbelievable trend that's very likely to continue. So we saw the Australian yen, New Zealand yen. Let's take a look at the CAD yen. This is also going to be a no-brainer. Sell it all day long. And same exact thing, down, down, down. And the last one I'll bring up is the, and I don't have this running because I don't trade it that much, and most of us don't trade it, Swiss yen, until about 7. The Swiss was very weak. You can see on this chart it goes up after 7. Currency meter showed you that. But before 7, again, this one falls, you know, 150 pips. Now, while I have this chart up, let's go to Australian yen, and let's go. If you're not using a 5-minute chart, most of us are using range charts. Go to 6R. This will show you a 6 pips per bar chart. Let's scroll back over the past. And, you know, very early in the day when one was strong, one was weak, you got this nice little pullback right here to go short. You got this nice little half an hour rectangle range pattern here that you could short with your stop right above the bar's high, right here, a few pips above here. And as it's going down, you can just simply move your stop down above each little swing high. You might have gotten stopped out here for 40 pip profit. And then you got a nice little pullback right here. Remember, for those yesterday who asked me what a 3 to 5 bar pullback is, using range charts, once you have a strong trend, 3 bars up to 5 or 6, you know, the more, it doesn't really matter. I would wait, it'd be a little bit more cautious if it went up 10 bars in a row, but here you have 4 bars up, 1 bar red. As soon as it goes 1 pip below that low, you go short with your stop right above the high. And, you know, even if you got out of this trade right here, you snagged about 10, 12 pips right at the bottom. Or you could also simply, as the market consolidates, move your stop to here, locking in maybe 6 or 7 pips, locking in 8 to 10. And you always are careful when the market goes to fib targets. The next, if it continues down, one of these fib targets is likely to be where it stalls. So this one just kept going. First sign of green, you want to get out. Right here, I'd be out of this trade at 44. It's likely to pull back more before it comes down, as you can see. So trading is really not that hard. And now with the benefit of having a quote sheet that shows you all the different, let's say you had the Australian dollar and the CAD, Australian yen, New Zealand yen, Swiss yen on here, and one of the currencies, the next support level was 50 pips down. Well, I would probably take that trade if it were me. I might take the other ones too, but do more lots in the currency that's more likely to give you the most pips. And the ones most likely to give you the most pips are the strongest and weakest, and the second ones are the ones that have the next area of major buying and selling the farthest away. They act like magnets, support resistance does. And usually the price will move to those areas.